but I'd say I was always blessed with, good math genes, and my dad being a banker.
What does it cost to start a location if you don't buy the building?
How important do you think like standard operating procedures are whenever you're doing when you're scaling a business?
AI hits, self-driving cars.
Oh yeah.
There's no racks.
Yeah.
What's up, guys? Today, we got a special guest, my buddy Frankie, and we brought in another guy who is in the middle of scaling his business. So if anybody watching is looking to scale their business, better tune in. Put some comments in the podcast. Let us know what you're doing now. If any of the things that we're talking about you're currently doing, or if you're getting some good information that's going to help you, we'd like to know about it. So, Frankie.
Yeah. Good to be here.
Good to be here. We're glad you're here. You got to see our new office here in Oklahoma City.
Wonderful. Glad to be here.
Yeah. So I've told Frankie a little bit about us. I know you guys are watching. They know a lot about Josh and I. But you have an interesting take, and you're like right in the middle of kind of scaling a new business, right?
I am.
Well, let's back up and tell us a little bit about some of your background.
Okay. Yeah. So, born and raised in Oklahoma, Tulsa.
How old are you?
That's what everyone asked me.
12.
I did drive myself here. Mom's in the parking lot. Yeah.
What a point.
Yeah.
Back.
Yeah.
I saw him wheeling it in there.
He has an e-bike.
I'm in my mid-30s, but I don't look it, No, exactly. I'm trying. Gotta avoid the sun. No, I look like I'm, Doogie Howser, but truth be told, born and raised Oklahoma, and I studied accounting and finance at OU. That's always been my background. My dad was a banker. My mom ended up going to law school, but her mathematics professor basically wanted her to study math in grad school, and she took a different path. But I'd say I was always blessed with good math genes, and my dad being a banker, he was always talking about it. So I love numbers. I know it's not for everyone, but I don't like to do some other parts of the business. So when I got out of school, I did really corporate controller work in Oklahoma City, and a few years into my career, I was a corporate controller for a private company. I got, I was starting to talk to some people about working for a company called Collision Works. And Collision Works was an auto body repair shop. They had about 6 locations at the time, and they were about to take some growth capital and really scale. I didn't know anything about the industry, but I knew that they had a really good CEO who was the founder. They had a really good, basically operation person. They had some other people that I'd consider, still to this day, mentors on the finance accounting side. Really some great people, good team. So I'd said, I was dating she's my wife now, but I was dating her at the time, and she was living in Arizona. So I was like, yeah, I'll jump in. I'll work 100-hour weeks.
You don't have the wife to tell you.
Yeah, exactly. And so, I jumped in the deep end, and I did not know what I was getting myself into, but I think that's part of it. It just, figuring it out and learning from people. So I did that for a number of years, and really, not only played a role in the accounting department, but also looking at, accounting is really just putting the numbers in the right place. So then the business, operators can go take those numbers and do analytics and do things that can help them run the business better. And so that was a key part, is accounting first, but really the next thing is what's called FP&A, or kind of financial projections and analysis. And so that was helpful for them. And really the more I learned about the business, the more I could provide them with good information. And the better we could analyze growth opportunities, greenfields, new buildings, brownfields, renovations, and acquisitions. And so over, the next couple of years, we scaled it to about 35 plus locations across Oklahoma, Kansas, and Missouri. We ended up selling in 2021 to Gerber, which is a big publicly traded company out of Canada, Boyd Group in Canada. And after that, I ended up kind of helping pass the baton for a few months to Gerber. So I kind of passed the corporate baton, and then I left and worked for the family office that was created from the sale. I was their chief investment officer for a couple of years before one of my colleagues I worked with at Collision Works called me, and he was probably one of the best operators that I worked with. And he said, "Hey, I want to start a shop. I want to start a body shop." And I knew he had all the skills to do it, but he wanted me to partner with him to,
Because you knew the numbers.
yeah, I knew the numbers. And he knew that I could take care of that back office. And I knew he could take care of run the operations. And so, we partnered together, and 2023, late 2023, we got our first shop under our name, CarWorks, open. But we've been doing it for a long time. But still, we had to show people our brand, show them that we're doing the quality work that we think Oklahomans deserve. And really, our philosophy is, take care of your employees, take care of your vendors, take care of all these people, and you'll create the ecosystem that gives your customers that great experience that, that we think they deserve. And at the end of, last year, we had 3 shops. So in about a year, we had 3. And then earlier this year in February, we acquired our 4th store. So we could talk a lot about scaling. I can tell you what works and what doesn't work. I've learned both over the years.
Well, we've learned some hard lessons too, haven't we?
Yeah.
So I think that where we start is, and everyone wants to know, is where are the pain points in the scaling stuff?
All over. So obviously, everyone who talks finance and accounting, you got to talk cash, right? And that's going to be a pain point. So really, all starting with, okay, what do we think that this growth is going to do? So you have to come up with some projections, and the projection, do you really want to be conservative on so that you can plan accordingly for cash? Because that's a huge pain point. How do you finance it? How do you put it together? How do you pitch it if you need to raise money for it? A lot of times, people are like, oh, you can just go to a bank. Well, banks like to lend when there's good collateral. And if you don't have good collateral, if your collateral is just the cash flow,
And there's no cash flow because you just started.
Exactly. And you might bleed for a little bit. So then you normally have to go talk to investors and get them, interested in it, confident in you. So, just getting off the ground with coming up with your projections is a pain point. But if you have the experience in the industry, that helps. And then you have to convince other people that your projections are solid, that you have the experience to go execute on them. So I say, just clarifying your vision, and then going out there and selling it to people and actually raising, and it's not always cash. Sometimes it's partnerships in other ways. You might need
Skill sets.
Yeah, skill sets. You might need people on your team. So you really have to build this vision and get other people to buy in.
So how did you do it? Did you raise capital?
Yeah. Well, my partner and I put in a considerable amount of our own capital, and then we didn't need any debt, but we said, okay, let's go grab a line of credit, and so we got a line of credit just to support our working capital needs.
Because what does it cost to start a location if you don't buy the building?
So if you don't buy the building, just like equipment and tenant improvements, if you're leasing it, could cost anywhere north of $1 million traditionally. We've been really fortunate. We've had some opportunities to find, lightly used equipment, or, we've been very fortunate, and we are very frugal because,
Any pitch.
yeah, exactly. And so we know if it's traditionally done for $1 million, let's try to do it for half of that. And sometimes we've gotten lucky and said, okay, we're putting $250,000 in equipment, maybe $150,000 in TI. And so, we're doing pretty good.
And explain to the people who are watching what TI is.
That's tenant improvements. So sometimes you might go get into a lease in a building and it's really not set up the way you want it. So you need to go in there and maybe it's just repaint and do some touch up. But a lot of times you're knocking down walls, putting up offices, making it yours.
Yeah. How important do you think standard operating procedures are whenever you're doing scaling, you're scaling a business?
So I'll say this. You have to have standard operating procedures for your company, but you also have to give your operators the flexibility to make calls, right? So at the end of the day, standing operating procedures are great, but if you don't actually explain, okay, store leader, here's what my vision is, because sometimes they're going to need to make calls that they know are in line with your vision, which is paramount to everything, but they're not in line with your standard operating procedures. So you might say, we never give any discounts, but your vision is to grow, and you've just communicated to your store leaders that we're trying to grow in this market segment in the first 2 quarters of the year. And so they're on, a lunch with a customer and they promise a discount. It's like if you are clear to them, like, hey, these are the operating procedures. This is what we need you to do every day, but here's the long-term vision. Help me accomplish it. It can help give them the flexibility to be dynamic, because when you're starting a company or scaling a company, you need to be like a speedboat. You can't just be chugging along, but they're extremely valuable. You want to make sure you understand the expectation for every employee, but at the same time, you want to make sure you have that plus communicating your vision.
So you started CarWorks,
yes,
right?
Mm-hmm.
Here in Oklahoma City.
Yeah, we have 2 in Oklahoma City, 2 in Tulsa.
So who's driving? Are you driving back and forth from Tulsa, Oklahoma City all the time?
Yeah.
How often do you go to your other locations?
I go up there once a week, and my partner, CEO, comes down. I mean, he
lives up there?
Yeah, he lives in Broken Arrow. Okay. So he came down yesterday for lunch and to pick up some equipment, and then he came down today for a meeting. So he is a road warrior more than I am, but I try to go up there at least once a week.
Okay.
Yeah, because Josh and I are, Josh said, yeah, he's getting ready to be living it. So he's here with me now.
Yeah. Welcome to Oklahoma City, boys.
On my last business, we scaled, and I was, I made a huge mistake when I scaled. I went 4 hours away on my second location.
That's too far.
4 hours about killed me.
Yes.
And I was having to push my team to go out 4 hours away. And not only did I go 4 hours, I went across state lines. So for you watching, there's a lot of different things when you cross state lines and you've only been operating in one state, from employment laws to banking to driving trucks, DOT regulations.
Yes.
How you pay your employees.
Yes.
Oh, by the way, the bank I'm using here, they don't have a location over there. How you deal with cash.
100%.
There's 1,000 ways when
it gets over complex.
Yeah, Oklahoma City, you can get there real quick.
Yeah,
hour and a half, I can fix that problem. 4 hours away, you're not going there for a day trip.
No, and that's something that's near and dear to us. So our 2 shops in Oklahoma City and our 2 shops in Tulsa, you can be to either shop from the other in 15 minutes. So when these markets get big enough for a market leader to be, overseeing all the shops in that market, our goal is for them to wake up in their own bed, be able to go to every single shop in one day, and come home to see their family at night. And if we can do that, we think we can attract and retain the best talent in the market and give them the balance. They might get home late some nights, but they're seeing their kids, they're seeing their family every night.
How do you know where to put a location?
We're really picky. So we passed on a lot of locations that are a little further out. We've passed on a lot of locations that don't have the drive-by traffic. We want a lot of visibility. We want, we get pretty picky about locations. So there's a lot that goes into it, but I say if you have, 5 things you want, you can prioritize them and say, okay, 4 out of 5 works, but the company's so new, we want all 5. So I would rather pass if it doesn't check one thing. We were actually looking at a shop in Oklahoma City, and we just acquired a shop in Broken Arrow in late February, and we were looking at putting an LOI on a shop in Oklahoma City that wasn't currently a shop, it was just a building, but we were looking at, taking it over, and we said, hey, we're checking every box except for timing, because I don't really think the one we acquired is up to speed yet. So we're going to pass, even though all of it's great. If you're new, make sure it checks every box for you.
So let's talk about the money part.
Yeah.
So you got 4 locations?
Yep.
Okay, 4 locations. You self-funded the first 4?
No, self-funded 3.
Okay.
And that was in partnership with another group in the industry. I can't give all the secret sauce, but we do have some capital that they put in.
Okay.
And then on top of that, for the fourth one, for the latest acquisition, we did take a term note with the bank.
Okay. So you're going to eventually run out of money. Are you evaluating each cash flow and say, hey, here's my new net worth, you're leveraging or not net worth, here's my new business evaluation, let's leverage that?
So our plan is to not take any more debt, and really, like right now. So, personally, I don't like debt. I have debt in my house, but nothing else. I don't like debt because I feel like debt is part of what's called capital structure. Just for everyone listening, your capital structure is how you fund the business. If you put in your own money, that's called equity. And then you can borrow money from others. A lot of times that's called debt. And so your debt and equity are what's called like your capital structure, how you fund the business. And I have a saying, and I know I learned it from someone way smarter than me, but your capital structure dictates your company culture. So a way to give you an example of that is you see these big corporations who are levered to the tills, right? They took out a bunch of loans to grow during COVID when interest was, basically nothing. Interest rates were really low. Now those loans are renewing over the past few years in this new interest rate environment, and they're probably going to their employees and saying, we need sales this month, right? And that type of pressure on an organization flows through to the culture. And so my partner and I have always said, and we're very aligned in this, let's try to be as low debt as possible. On this new acquisition where we did take debt, we plan on paying that off in less than half the time of the AM. And we'd like to just have a very, very low debt organization so our culture can stay as it is.
So I have a question. So you have 4 right now, right? And only one you have, we'll say, debt on.
Yep.
Right. So I would assume by listening to what you're saying, your plan is to pay this off in half and potentially not take any more acquisitions until that's done, so you can do it in cash moving forward.
We might take some other acquisitions, but we would probably just finance them or put our own capital in.
I see.
But really, we're going to be really picky. And so like right now we have 2 acquisitions we've done, and we have 2 buildings that we've just leased and renovated. The acquisitions, they have work coming in, right? They used to be a shop. People already know the shop. They're going to come with cars on the ground. So you can really get ramped up faster. The new locations cost a lot less, right? You don't have to pay for the acquisition, but it takes longer to ramp them up. But we run pretty lean, so we think we can get, maybe not go the acquisition route for the next one, but go the route of, hey, let's get a lease, and if we can put, if we can do it for $250 to $500, we can do that off cash generated.
Yeah, it's killing us here because our Oklahoma City location, we're trying to grow it pretty much all organically.
Yep.
We did make one acquisition that had a few assets on the ground, but
Not enough to alter the cash flow.
but the issue with these businesses that we're buying, the fact is they have old wore out assets. So you're trying to customer.
Fully depreciated.
Yeah, you're just buying a customer base, you know what I mean? And
Yep. And you guys say, hey, I'll roll up my sleeves and go earn that market share and not have to pay.
but you're paying either way. You're paying with time,
exactly.
or you're
Exactly.
paying- I'd rather pay with just a fair purchase price to move on.
Yeah, I mean, I would say we have a little bit of a benefit because a lot of times we have 4 main services,
Mhm.
okay? And we can go in there and make an acquisition of one. Well, we have the upsell capabilities of the other 3.
Awesome. So you're not paying for someone who's doing all
There's
4.
a market with the lowest EBITDA multiple business line.
Love it.
And then we add in these other vertical markets, and then
Scale it.
that's kind of our secret sauce. If you're watching and you're a competitor, we will take you out. I was looking at a piece of property in Stillwater, starting a location up there, and the guy that owns the property is actually our competitor. And be always out.
Did you know
he's
that?
one of the no, you showed up in a flatbed farm truck, nicest guy ever, super knowledgeable. He's 3rd generation trash guy.
Awesome.
And just so super nice guy. But we were talking about technology, and they're way behind on technology, etc. And one thing I got a question about: AI hits self-driving cars.
Oh yeah.
There's no wrecks.
Yeah, absolutely. We are hyper aware of of where it is. We try to keep our finger on the pulse as much as possible. But I remember when I got into the industry in 2016, a lot of really smart people said, all of our cars are going to be self-driving in 3 years. What are you going to do? And, I'd sit there and just listen to the people who have been in the business for a long time, and they would just say, okay, let's just break this down into brass tacks. There's a number of factors here, one of them being the average age of the fleet. So if the average age of the vehicle on the road is about 7 years, last time I checked, then if you were to have all new vehicles sold, fully self-driving, then it's going to take 7 years for that to happen. And that'd be aggressive. We don't see that right now. Right now we do see, there's Waymo, there's Tesla, and they're doing really, really good things. Now, what's the cost of someone to own a vehicle? I think the bigger change would be
the ride sharing.
Yes, if vehicle ownership changes, right?
I think it's coming.
I think it is too, and I think it's coming fast. But what I think it can't do is I don't think it can take the place of someone like if you have, say, a family of 4, right? If they have 2 kids, they might need like, hey, I'm going to have a rideshare pick up my kid to go to soccer practice. Like,
I'm not even going to be in the car.
Yeah, I'm not even going to be in the car. It's some of these things are just changing the way we think about our life. But you might need to say, hey, I still want my car to drive to work, right? So it might be hard for you to completely go 0 cars.
But they'll do, my theory about cars is they'll jack up the price so high that you have to ride share.
So, well,
you don't need a garage in your house. Your garage will be converted to an extra
house. Well, the other thing is like the cost of the equipment. So the way Waymo does it is with LiDAR, a lot of sensors. Just that equipment package is, and I'm completely guessing, but call it $25,000 to $50,000.
Yeah.
It would be hard for someone to afford it, which is going to price people out and make them more likely to be a user on it on a per unit basis whenever they need it. But I don't think in the next 10 or 15 years, I don't think every car is going to be self-driving. I think on the tail end of that 15-year timeline, it's going to be a lot more prevalent. And so my partner and I are obviously very aware of that, but we think there's a lot of market share that we can grow because we're small compared to the multi-billion-dollar operators.
Well, and if you start seeing that and you feel uncomfortable, put it up for sale.
Exactly.
Find another widget.
Well, and the other thing is, I think it'll provide opportunities that we don't see yet. So say you have a car and it has, call it $50,000 worth of sensors. Well, that car is going to get damaged just from the day-to-day weather, whatever. I think there's almost, I call it like a trust baton, right? So if I want to feel comfortable driving a car, that's one thing. But if regulators are going to approve this, there's going to have to be something where they say, okay, maybe every year that car needs to go in and be inspected.
It's like calibrated.
Exactly.
Maybe it's once a month.
I mean, it could be because human life is a stake.
Exactly.
So you got to imagine the regulation is going to be stiff.
And if that sensor is off just a little bit, so like for example, if this thing is looking forward and it had the ability to throw on the brakes, and this is just a really simple example, go completely as fast as it can to a full stop on the highway. Well, if you're going under a bridge and that's just off to the side,
you're done.
And it thinks that bridge is right in front of you, it's going to slam the brakes on. Now, you might be saved, but the person behind you might not physically, like the laws of physics don't allow them to stop in time. So, there are trust baton things where I think there's an opportunity in, call it calibrations and, inspecting those vehicles. And so that's something that we're looking into. We want to keep scaling our business, but we think there's,
I think the biggest scare for me on this is these big guys that have this big private equity monies are going to have access to all this technology before a small guy like Eric.
And that's what we've been talking about.
Are they going to be able to drive down value for the private guy so much where
you have to sell,
or they don't need you?
Yeah.
You have to go to these guys because are you going to be able to spend $20 million on R&D?
Mm-hmm.
You know what I mean? Mm-hmm. Like if they figure out self-driving, or there's some type of technology on there that our big competitors use that they tap into. We just can't afford to tap into it.
Yep.
Or it's proprietary technology.
Mm-hmm.
Now what?
Yeah, that's
Now
kinda
I
nice.
go from selling my company and I'm thinking I'm gonna walk away with this nice exit to I don't even know how I'm gonna survive.
Yeah.
You know,
So I think the moral I'm kind of seeing, and this is interesting that we got to this spot with scaling is, understand your end and your exit and what the changes of the times are going to bring, right? If you're going into something new and you're scaling, you better be paying attention to the changes around you, right? No matter what. And it sounds like, you're very aware of the potential changes that could come and trying to stay ahead of it. And sounds like you're very well versed in what could potentially happen. And I know, with the quantum computing that we've been talking about, and
Oh
stuff,
yeah. You talk about that stuff?
yeah. And
Have you guys gotten on robots yet?
we know quite a bit, I would say.
Okay, love it.
But
I'm gonna own one of those robots.
oh yeah,
Yeah.
you know what they got? But
Yeah, the humanoid ones. Yeah, she's got blonde hair.
so I thought something was interesting that you said earlier.
Threw you off for that
Sorry
one.
for your husband, Ashley. I thought something interesting you said earlier about being dynamic in your scaling that kind of hit home with me is, we like to look at our pricing, look at our competitor pricing and everything else, and and we just scaled into this new market, right? And we had this grand idea of, this is our new minimum pricing, right? And we throw it all out, and we've done this a couple of times, right? And then we get to a new market, which is, I think, is way different. And I'll explain what I mean. Is if you have a brand name in a market where you're very well known and people are calling, right? You might be able to set your pricing kind of to where you want it to some degree, right? You're not gonna, you can price yourself out of the market, right? But at the end of the day, you have a little more, we'll call it leverage, right? But you come into a brand new market where nobody knows you, and you have this hard set line that you draw in the sand, and you expect the results, but these hard set lines in a brand new market where nobody knows you,
Yeah.
they don't have the best approach.
If you want to grow market share, which is what you're doing a lot of times when you're scaling, a lot of times when you look at scaling, there's two factors, right? There's one, do I have the demand on my product? And there's two, can I fill that demand? And you got to have the demand on your product, hopefully first, but sometimes you can have the productive capacity before. You just don't want to be paying for it for too long before that demand catches up.
That's where we're at.
Yeah.
Well, our demand is there.
Yeah,
You know what I mean?
yeah.
But I would say that I agree with what you're saying.
Yeah.
I would say we're at the point where we also a little dynamic twist that we have is we're doing something different that nobody else is doing, right? And but it's our job to push that out as fast as we can, right? Because it's such a unique situation that the faster we can get in front of the people who are using all of these services and sell them something that's so easy to sell that, hey, nobody else is doing this. Here's the benefit. This, and nobody else can offer those same benefits, right? To me, right? The demand is there. It's not necessarily to us in particular. To the products are there, right? And we have to push the niche that we're in that is different in those products that everybody else has.
So if you have the assets to go fill that demand, I would say your assets are being underutilized. And so and granted, I don't know your cost structure, like cost of goods sold, but if you have a high margin business, so you have low cost of goods sold, then you want to sacrifice some of that margin to get your asset utilization up, and aka those resources that aren't being sold, and then you can grow your margin.
That's what we're about to
grow
do.
your
We're about
market
to
share.
drop. We're about to drop the drawers off this thing.
You're gaining market share.
But we're going to gain market share, and then when you have scale and you have movement, you can start figuring out a way to. And Eric's done a good job, and we kind of implemented our own little mini Doge within our company.
Love it.
Because we're the size now. We're like, start looking at all these little things. Like, well, we got toilet paper. That was $70,000 if we use. It's $65,000 if we use one roll of toilet paper for every toilet we have out right now with no growth per week. Wow. $65,000 savings, what we just did. So if they use two, you're 130.
Yep.
You know what I mean?
Yeah.
And that was just one with many. So like our margins are ticking back up. Now it's like, I'm about willing to drop them back down, but I know I can tick them back up when I start getting these people. Here's the thing about it, in my opinion. People need our services. They just don't think about on-call when they need them.
Yep.
I need them to think about on-call.
Yes. You
know
need
what
to
I
do
mean?
branding.
I need to brand ourselves here. Social media, email marketing. Eric's pretty boy going out there shaking hands with his mohawk, with his gray hair.
When did that start?
Well, hey, I bet you got something too. You're hiding under there.
No.
He just started
That came as far away. Yeah, exactly. It's coming. It's coming soon.
You just started working for yourself. I see you get a few hundred of these people running around.
You're like,
Somebody calls you back. You're like, man, this paint job looks like crap. Really, sir? You got there like, oh my god.
There's another one. Yeah.
So yeah, I mean, that's my strategy right now. When they think about our services, I need them to think about on call.
Yep.
Yeah.
And then here's another thing that we're running into, and it sounds like you're going to be running into it too, is you start adding all these vertical markets. Sometimes I think we overloaded our salesmen with the amount of products that they can push and feel comfortable, because they always gravitate to what they're trained to sell and what they feel comfortable to sell. And sometimes I feel like, because when I go to a customer that we even in Tulsa, they know who on call is. I'm like, hey, did you know that we do permanent fencing? They're like, man, or temporary, or office and storage containers. Like, we didn't know you do that. I'm like, Moose, didn't you go over here yesterday?
It's like, yeah, I sold them the other product.
It's called upselling.
You know what I mean? Yes. And too, like, there's a lot that you have to continue training your staff to make sure they feel comfortable to say, hey, I've identified a need from an existing customer. Let me try to help them.
And we run into things all the time. Like, I'll give you an example. We don't have our systems in place for sales.
Yeah.
And we're working on that right now. So we put this guy in place to handle our sales department. And now we're like taking things off of him because we're asking him to do too much.
Yep.
You know what I mean? So how do you transition an inside sales lead to outside sales? And then when does that happen? And how do you pay commission? And there's so many little things that go along with that when you want to scale this thing.
Yes.
And then when you start changing people's pay quite often because you didn't think every little thing through, usually pisses people off.
Yeah, you basically have to eat your mistakes. And I've done plenty of those where it's like, I'm not going to go have a conversation with one of our best people and tell them that, something's changing because of something that I did. I'm going to have to eat that mistake and try to gain more value out of their role.
Yeah. Or you're overpaying somebody and now you need to lower the pay.
Yeah.
Because you didn't calculate it right.
Yeah.
That doesn't
Numbers are important.
That's a problem.
It can disrupt your whole sales staff.
100%. And it disrupts your culture, right? You have a bad apple, and if they can poison the well, it's like you got to keep your people engaged.
Yeah. So
Head out here.
give me, so we're going to wind this down.
Yeah.
But if you're a brand new person, I want you to kind of give your perspective, and I'll give my perspective on the service side of things, right? And we're living it right now, just like you're living it right now, right? You actually been through it first because you've done it, but now you're doing it for somebody else. Now you're doing it for yourself.
Yeah.
That was the hardest way you've ever done it.
Oh yeah.
Made all the mistakes with somebody else.
Oh yeah.
That is true. That's true.
Yep. So if you were starting today, you're an entrepreneur who is watching this, right? What advice would you give them to start scaling? If they wanted to start into something,
Or they're already in there. They're like, hey, this is I'm making more money.
and they wanted to scale it, give your advice on what you would do, how you would do it?
I mean, one, if you're an entrepreneur, you're probably very passionate. You're probably very hardworking right out of the box. So I'd say those are critical, right? You're going to need to not only kind of create your vision, think about what you want it to be, and then work backwards and say, okay, I'm here. How do I get there? So think what you want it to be first. When you have that very, very clear, you have to go get buy-in from everyone. And when I say everyone, I mean your spouse, your business partners, your employees, your people that you work with, your vendors, your customers. You have to get buy-in because you have to change the way they think about your business. You can't just change the way you think about your business and expect the world to accommodate. So I'd say first, make sure you're dedicated to put the work in because it's a lot of work. It's a lot of hours. And then two, craft your vision, make it really, really clear about where you want to be. and then go get buy-in from everyone. That's the first step. And then from there, it's rolling up your sleeves and making it happen.
Love it. So we're giving your perspective about scale. You've been through a couple. Whew.
Sometimes when I scale tough box, right? Like I'm looking at your business model, I'm like thinking, I'm just sitting here thinking of all the possibilities. Yeah, why did you go to Broken Arrow and Tulsa when you have probably could have opened up 10 locations right here in Oklahoma City Metroplex? Why all decided to go to Broken Arrow?
I'll tell you on the next episode. Oh yeah. Thanks for
what I'm saying.
Yes.
So like we're looking at like for us, our vision is to be, offer 4 or 5 products on every single job site. And then we have all these other vertical markets. But I think with the amount of products and services that we have to offer, unlike when I was at Tough Box, we only offered one thing, containers.
Yep.
It was either a 40-foot, 20-foot, or an office. Right? But it was containers at the end of the day. You needed it or you did it. Here we can tap into so many deals. I don't think I'm going to have all these locations.
Yes.
I think each location could be 30, 40 million bucks, 25 million bucks, and you only have 2 or 3 locations.
Yep.
Which is going to be a lot more manageable for Eric and I to manage. Because like you said, when you got a business that's doing XYZ millions of dollars per location, you get high caliber people.
Yes.
You know what I mean? And then he's not having to go to every one of these locations every single week like we are right now. You know what I mean? We can have like a regional or a higher replacement for Eric.
Yep.
Yeah. And we're thinking about more visionary. So I don't know. I think that's why I get so excited for what we're doing here, because I know distance is tough. It sounds like you just got married and about to have kids and all that stuff, or already have kids and
got one.
And I don't like missing out on, you say you want to be home in your bed every day. I sacrificed a lot of my family's and kid time when they were young. They didn't know I was there, or not there. But I mean, Ashley, I always say, you got to get buy-in from your spouse, because you have to be psycho to start a business, and you really have to be psycho to want to scale it.
Yes. Yes.
Yeah.
You know what I mean? So like, you have to get buy-in. And it's funny you say that. I agree with you 1000% is you got to work your vision backwards. Figure out where you're going. I think I'm changing my mind. I'm to the point now where you just go and get the best talent.
Yep.
And say, hey, you've been doing this here forever. You're proven. Let's come on.
Exactly.
I'm going to overpay.
Yes.
I'm going to over-deliver. And all those things that you're constrained because it's a big company you work for, let's go have fun.
Yes.
I'll give you my perspective. So I think for me, what I've seen work is you have to pull the trigger number one to get a start. Just like you said, your first 2 steps are a guarantee.
Yep.
Right. But I think you have to have, for me, I'm not as numbers whiz as you are, right? But for me, what I think worked was, a foundational business first that is cash flowing first, that you can afford to move into another location and potentially, if you do it organically, lose money for a period of time while you're growing that second location. And that's probably the slower way, right? Is you do it that way. Or if your business is doing well enough, you could, and you have your home-based business doing well enough, you could potentially have enough money to take a loan to buy into a market, right? And then go that way. So we're kind of in the mix in between that. But for me, I think the work ethic, the vision, right? And having at least one starting business that is cash flowing to kind of keep things moving. That way, if you make some bad decisions over here, you can eat them up over here for a period of time.
Yep. Investment.
Right? Yep. And then start your web that way, right? And once you get this one going good, now you got this one, right? You might be losing for a little bit potentially, or not. And then this one's going good, and they got 2 going good, right? Then you can double fuck up on this one over here.
Yeah, exactly. You have more to carry.
Yeah.
And like the last thing I'd say about scaling is sometimes when you are so blinders and you are in the thick of it, you can get frustrated at where you are because you're not at that destination yet. And I'd say something that's really key and has been helpful for me is to make sure you take, I don't care if you're just pulling in your driveway and before you go in, whenever it is, take a couple minutes and maybe it's with a partner or a colleague or someone else that you're working with on this project, but take some time to have moments of perspective, because you could look back and say, wow, over the last 3 months, 6 months, year, this is incredible. When I first started, I never would have thought that I got this far. But when you're in the thick of it, you're so frustrated because you didn't get that new account and you can't get, that jump that you want, but take some moments to say, man, look at where we've come. It's like, this is incredible. Like, we would be so grateful for it if you looked at us 5 years ago, we would be so thankful for where we're.
You can never sell enough fast enough.
Yes.
Yeah, you
can never be there fast enough.
Yeah, you get caught in the route wheel. And
Yes.
I'll tell you what.
You go, the other day it happened to me. Oh, you weren't there actually. And I was walking in between our buildings that we have, right? Or 2 or 3 that we have in Tulsa. And I stopped. And I know I've never really done this. Really, we talk about it sometimes, right? But it feels like we're still going and doing something, and we don't ever like sit down. I stopped in between the buildings. I turned around and I looked at everything I had. And I was like, "Damn, it was just the other day." You know what I mean? That we were. I was literally helping build porta pots in a green field with one little gravel road that we didn't own.
Right.
Yeah.
And, took a second to have that perspective and be like,
I may have had a rough day, but you know what? Holy crap, man.
Yes. You build something.
Building something. So thanks for watching. If you guys got something out of this, comment in the podcast. Make sure you like, make sure you share, show some love.
And if you need your car worked on,
Car Works Collision.
let's go. Oklahoma City.
Yeah.
Tulsa.
And Tulsa.
Yep. Thank you. Thanks.
Yeah.